Brian.
Hey Geoff.
Hey. Good. We've done a few of these. I think the scary one was when we used the measuring tape at the beginning of COVID. People can look back at that. We were pretty on the money that day because we largely talked about the cycles. Yeah. We were reading newspaper headlines that day that said property market's going to fall more than 20% overnight, etc., etc. So we made ourselves one of these. In actual fact, today, right, the topic is why landlords aren't worried about the interest rates. But let's talk about it.
Yep.
Because irrespective of whether you should or shouldn't be worrying, people might be. So let's address some of those points.
Yeah, for sure.
So a number of things for us to discuss, right? The first thing is stress testing, because in actual fact, when the bank checks your maths, and they're not going to lend you the money if you can't afford it based on the maths, because they're not going to lend you the money. That's the first point.
That's it.
Right.
Yep.
So with the stress testing, that's always 2.5% above whatever the market
Yep, that's
is.
right. That's right. So what that basically looks like is there's an assessment rate that a lot of customers don't realise, okay?
Yep.
But you'll have a net rate, and that's basically when you draw down the funds, you'll have an interest rate of, let's say, 3%.
Yep.
Okay. When the bank do their assessment, they want to make sure that you're able to afford it 2.5% on top of your net rate.
Okay.
Okay. So what that allows is that a fluctuation in interest rate, because if interest rates rise
Yep.
by another 2.5%,
You're still covered.
you're still covered.
So
on
let's
that.
stay with that one, because a whole lot of the people who might be watching this and might be thinking about it all actually got tested at that rate.
And higher.
Yeah. And it's come down, and therefore they're ahead of where they, in theory, should have been.
Yep.
At the same time as that, the rental payments have gone up more than they would have estimated. So these people, who might be worried right now, are actually in a double win scenario currently. There's a bit of a buffer happening in their world at the moment.
Yeah.
So this is just going to pull it back towards a pendulum swinging, a curve rising. There's a quite a degree of safety in there. I've got clients who are getting $150 a week more rent than they thought they would,
Yeah.
and that was $250 positive plus the extra, right? But let's continue to work it through,
Sure.
right? So for those people, the interest rates are going to go up, and they're going to continue to go up, and we don't have a crystal ball, but that's what markets do, up and back down again. Right?
Yep.
So why landlords aren't concerned, you're getting the tax deductions from the new property anyway, right? You've got a situation whereby you can control the rent, right? So you can charge the right amount of rent, yeah? And you could also consider doing something with the interest. What could you do? What are you being asked about?
Yeah, sure. So one of the hot topics from our side at the moment, obviously in the mortgage space, is interest rates. And a lot of our customers are contacting me and they're saying, hey Brian, what do you think? Should I fix my interest rate? Are interest rates going to go so high that I'm not going to be able to afford it, and so on? So one of the things that I've sort of been talking, and I'm bringing back to what's the purpose of a fixed rate. And the purpose of a fixed rate is predominantly to give you, as the customer, the certainty around the repayments.
Sleep well.
Sleep well,
Yeah.
okay? And that's what I'm saying to customers. If it makes you feel better, if you can sleep better at night knowing that my repayment for the next 12, 24, 2, 3 years, whatever that so happens to be, is going to be at this amount and it ain't going to change for the next 3 years, then I'm good with that.
Yeah, potentially don't fix all of it, because there are some advantages in having some variable, particularly if you've got extra cash flow and an offset account.
That's right.
So
Yep.
do some maths on it before you just fix.
Correct.
Yep.
Correct.
But they fix.
That's right.
Yep.
So understanding that the products typically on a fixed rate get rid of the offset facility.
Yeah.
Okay, so you can't have an offset
Yeah.
facility.
Yeah, that's
typically
what I
on the
mentioned.
fixed
Yep.
rate. Okay, so as I said, if it helps you sleep better at night, look at the fixed rate. Okay, now another strategy that we're looking at with customers is if they don't feel like fixing the rate in, because typically your variable rate is about 1% to 1.5% higher, depending on
Lower.
Sorry,
Variable
lower.
rate lower.
Variable
Yep.
rate lower.
Yep.
Fixed rate is currently higher.
Yep.
So 1.5% to 2% lower than the fixed rate.
Yep.
Okay. So instead of today saying, "Hey, I'm going to start paying 4.5% on that fixed rate,"
That's a bit high. Yep.
okay, that's too high.
Yep.
But I also want to be able to budget and understand if the variable rate hits that point,
Yep.
what are my repayments going to be? What does that commitment look like? How does it affect me, my lifestyle, my day to
You
day,
can do that calculation now.
and what that looks like?
Yeah.
What I'm also suggesting is that if that repayment is $350 a month more, instead of maybe fixing it in today, put that money to the side,
Yeah.
and then use that as the money for that when that interest
Buffer.
rate does, the buffer. So when that interest rate does increase,
good concept.
that you can then use that money to assist on the repayments.
Fantastic.
So there's a couple of ways around it.
Very good. And it's likely to keep going up. You know, we don't have the crystal ball, but
Look, the numbers with the inflation rates and all of that that's currently in the market, from as at what we're seeing today, you know, the market commentary is that, and the expectation is that the interest rates are we're going to see another few rate rises.
and then it could come down. There are a lot of different variables. So people have got a residential mortgage, right? That's a different scenario, because this investment mortgage we've spoken about, right, is a tax deductible loan. It's part of a strategy. It's completely covered by the rent. Yeah, might be slightly negatively geared. In most of our clients' cases, it's actually strongly positively geared,
Yep.
right? But the reason they did that is before they did that, they've got income coming in, tax going out, mortgage going out, and they worked out it might take them quite some time to pay the house off. So they brought another piece of property in to create the cash flow, the tax savings, the additional income, etc., 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 to help actually burn their mortgage down faster.
Yep.
So ironically, some people might be sitting there going, maybe I should put it off now. Maybe you should speed it up now, for example, right? Because there is some merit in making sure you're doing something in a rising market as well.
Look, absolutely. And what you just got to remember is that when the bank's doing their assessment on applying for finance, okay, because they're ultimately the gatekeepers to this, okay,
100%.
is that their assessment rates are still going to be moving in
Above.
tandem
Yeah.
with the current interest rates, or the net rate as such.
Yeah.
So even if a customer today is applying and their net rate is going to be 3%, it's still going to have that buffer added on top of it to ensure that should rates get to that level, that they've still got the
And the
repayment
maths
capacity.
people and the economists that are working for the bank are probably doing a lot more calculations than we would be doing. So if they think it's going to go up, they will already be doing the maths around checking people's affordability, etc., etc.
Absolutely, and they're good things as well, because
Yeah,
at the end
100%.
of the day, we
Safety
put
barriers.
safety barriers. We put all the checks and balances in place to make sure that when the customers are applying, they have the capacity to repay and the capacity to do this. So
I think the other comment to make at the moment is that it's good practice. We have a bit of a laugh about the fact we've had a coffee delivered. We've had multiple coffees delivered during the day. It's a really good time to use that slight nervous energy or the think. It's like a bit of an alarm clock to do some budgeting.
yeah, absolutely. That's the other point I make with a lot of my customers is that, okay, so they typically are asking me, is it a good time to fix the rate? I give them the options. Okay, this is what the repayments look like, this is what the term, and so on. So we work through that in a sort of methodical approach. But the other item we talk about is the household budget. Okay, you've got to now really understand what are your fixed costs and what are those discretionary. You mentioned the coffee. Okay, there's typically things, and
With the muffin and whatever else you buy at the same time, yep.
you know, let's say you've got your Netflix, you've got Stan, you've got Disney, you've got Binge. Do you need all of those streaming services? You know, these are the times when it's probably not a bad idea to maybe have a look at that budget and see where, if needed to be, can I actually start to, cut back on a few things. So I've got a really interactive spreadsheet. You just put in the fixed incomes that you get, and then the rest of it is all variable, all itemized, and it spits out
So a budgeting tool.
Budgeting tool.
Yeah.
Happy to share with you, happy to share with customers, and as I said, it's a really worthwhile exercise to, I suppose, maybe help you come to the decision on should I fix it in or should I leave it at variable.
What should I do?
What should I
I
do?
tell you what we should do more frequently. We should catch up to not just make the video, because the busier we get and the more customers we've got, the less we do that. So let's do the opposite of discretionary spend, and we'll spend a little bit of money and enjoy each other's company. Thanks for the video, mate.
Thanks, Geoff.
And please reach out, ask us questions, whatever it is you're thinking about. Yeah? Of course, individual circumstances do vary, and you should talk to your experts, your broker, your financial planner, etc., about your situation. What we're trying to do is give you some general commentary on what happens in the marketplace to help you with your customer journey. Please do speak with your experts. Okay, have a great day.